Welcome back. You're still watching Business Morning. Mutual funds have been considered as a good alternative investment opportunity, particularly for retail investors, because it gives them access to diversified and professionally managed portfolios at a low price. However, mutual funds in Nigeria recorded a bearish performance in the first quarter of 2021, as only 25 funds posted positive growth against 59 declines, while 34 funds remained flat. Let's talk more about this now to Managing Director, Codrus Assets Management, Gbolahan Aino. Mr. Aino, thank you for joining us. Great to have you.
Good morning.
Good morning.
Happy holidays.
Happy holidays. Well, investors' participation in mutual funds has been on the rise, with net asset value growing by about 50% to 1.6 trillion naira last year. What is driving this growth?
Thank you for that question. Interestingly, if you backtrack, the mutual fund industry as of 2002 was just about 40 billion in terms of NAV. There were just about 12 funds. But fast forward, we've seen the growth in the industry, and it's been a confluence of factors. One, the regulators have contributed to the growth, and also the operators as well. In recent times, there was a problem where we had high yielding environment in Nigeria, so we saw a lot of money market mutual fund coming out. So investors were really aggressive in terms of money market mutual fund. But last year, the mutual fund industry grew by 50%, gained about 500 billion in terms of NAV. What fueled it, despite the pandemic, we saw a lot of shift to safety. So there was a lot of investors that took interest in fixed income fund and dollar funds as well. Last year was a period of low interest rate environment. Yields were almost in the negative territory. So some investors shift their preference from money market instruments to fixed income instruments and bond and dollar instruments. At the moment, the dollar mutual fund is about 200 billion in terms of NAV. But in terms of what has really fueled it, so if you backtrack, before, the industry had a lot of infractions. So regulators tried to sanitize the industry. One, they stopped giving out licenses. But after that, they started to give out licenses. What they did as well was that they made it quite easy to launch a mutual fund. In the past, to launch a mutual fund, you have to have 10% of the value you're trying to launch. That value was reduced to 5%. Also, in terms of the IPO, now there's no IPO if you want to launch a mutual fund. That's initial public offer. Once the document has been approved by the SEC, you can start your mutual fund from day one. So in terms of the regulatory environment, this has been more favorable. And also, we are announcing a lot of products. In the past, we were just equity mutual funds that we had. Now we have a diversity of mutual funds. We have Islamic-based mutual funds. We have ethical mutual funds. We have infrastructure fund. We have real estate mutual funds. We have fixed income mutual fund. We have dollar-based mutual fund. And like you rightly said, mutual fund is just a vehicle. It gives investors access to various sort of investments. Ordinarily, it's quite expensive to do some investment. If you're going to buy one, for instance, at the private market, you need 50 million. Not everybody can afford 50 million, but mutual fund makes it very easy for you. Because as little as 5,000, you can access a lot of the mutual fund. I usually call mutual fund democracy of investment of the people, by the people, and for the people, because it's affordable, it is transparent, and it's easy to access. So what has driven the growth is being regulatory, and it's also been a lot of the operator, and a lot of also products as well. We've had various products now in the mutual fund space. At the moment, we have over 115 type of mutual fund at the moment. Like I said, 2002, we just had 12 mutual funds. Now we have 115. And the NAV, like you already said, moved to 1.6 trillion. Although there's been a bit of decline this year, as investors are also trying to invest directly in the fixed income markets. This year has been a year of rising yield environments. So we've seen some people enter their mutual fund and also investing directly. But there's a lot of growth potential, like I would say. In other clients, mutual fund industry is massive. It's about 100% in terms of penetration. When Nigeria, mutual fund as percent of GDP is just about 1%. So there's still a long way to go. But in terms of where we are coming from, we've gone a long way. In terms of compound annual growth rate, we've done about 37% in about 9 years. And I think I think I'll just go forward from where we are at the moment.
Yeah, talking about the potentials for growth, yeah, in comparison to the pension industry, mutual fund is just about 14% of the pension size. From a regulator and policy point of view, what do you think can be done to engender growth?
Thank you. Yeah, right about that. So the pension industry is over 10 trillion. For the mutual fund, we're just about 1.5 trillion at the moment. So just about 14% in terms of size. Like I said, the growth we've seen now is both regulatory and operation driven. I think the regulators can also do more. So in terms of fee structure, lower the fee also means that return to investors will also be higher as well. So I did mention that they reduced the proprietary investment from 10% to 5%, which is good. I'm looking for a period when that will be totally eroded. So you don't need to put the amount of money you want to launch a fund. Just imagine if you need to launch a fund of maybe 10 billion, that means you have to put down about 500 million, which is expensive. So that can stifle growth. So I'm looking for a period where maybe there won't be any proprietary allocation that needs to be put down. Also in terms of awareness, they've done a lot, and FMAN has done a lot as well. FMAN is the Fund Manager Association of Nigeria. They've been doing a lot in terms of awareness, in terms of financial literacy, and they've also done a lot of collaboration with the regulator. So I think there can be more awareness. I think until we get to a point where everybody on the street knows what mutual fund is, every student, every worker knows what mutual fund is. Abroad, a lot of people invest through mutual fund. The mutual fund size is almost as big as even the stock market size. The biggest mutual fund player in the world is BlackRock. In terms of NAV size, is 9 trillion US dollars, followed by Vanguard. Of course, Nigeria, we are moving forward. So I think when the environment becomes a lot easier, we'll see more participation. I think from the operator perspective as well, there's a lot that can be done. And I think in terms of reporting, there can be more standardization in terms of reporting as well. That makes it easier for investors to be able to compare likes with like and be able to choose which mutual fund they want to go with. Also, we've seen a lot of professional fund managers come into the space as well. I think that is good. I think more of that as well can also bring a lot of confidence into the industry as well. I think from a regulatory perspective as well, maybe workshop from time to time from the operators and regulators as well can also maybe want to engender growth in the mutual fund space.
All right, are mutual funds ideal for every investor class, or is it better just for retail investors only?
So it's ideal for everybody, both retail, both HNIs, both institutions. In the Pension Act, there's an allocation for mutual fund. Pension companies can invest in mutual fund, although there are requirements or categories for to invest in mutual fund. So anyone can invest in mutual fund. One is to see that mutual fund is a vehicle that allows you to achieve your objective. And that's a mistake a lot of people have made in the past. They think that mutual fund just speaks to fixed deposits or mutual fund just speaks to equities. Abroad, we have commodity-based mutual funds. We have ETFs. Although we have ETFs in Nigeria as well, we have different kind of mutual funds, real estate. We have mutual funds that focus on oil and gas. And so we have mutual funds that focus on retirement. So it's a vehicle that just helps you to achieve your objective. And two words in mutual fund. So mutual fund, mutual then fund. Mutual means that it's a collective objective, people with the same objective, either long-term or low risk or high risk, and the fund is being pulled together. And so for every time you invest in mutual fund, you need to understand the objective of the mutual fund you invest in. Not all mutual funds are the same. Some are equity-based, some are fixed income-based, some are money market-based. We need to understand the objective. Am I investing for the long term? Am I investing for the short term? When answering your question, yes, anyone can invest in mutual fund, both retail, both HNIs, and both institutions.
Now, according to the latest inflation data released by the NBS, Nigeria's inflation number, of course, sustained upward trajectory in March, increasing to about 18.17% relative to 17.33% in February. The next inflation data, of course, for April will be released on Monday. Despite the uptick, the general expectation is that the direction of inflation remains upwards. In your opinion, how do you think the rise in inflation affects mutual funds investment?
Okay, I think that's a very good question. And so last year we had low yield environment, and I saw a lot of investors shift their preference from money market mutual funds to fixed income mutual fund. Now at the moment, inflation is rising, and for a lot of investors, they have negative return on their investment because inflation rate is higher than the return they're getting on their investment. But what we've seen in recent times is that there's been a diversification in terms of currency. So a lot of investors are shifting their mutual fund from local mutual funds to foreign based. Also, some investors are also taking advantage of the high interest rate environment and investing in fixed income mutual funds. We also see some investors as well that they don't mind waiting the long haul. They invest in equity mutual fund or balanced mutual fund. What equity does for you is that over a long period of time, like 3 years, it always outperforms all other asset classes. For instance, A lot of equity mutual fund last year did over 50% in terms of return. And last year, where we saw a lot of money market mutual fund doing just about 5%, fixed income mutual fund doing sub 10%, equity did about 50% for a lot of mutual fund. So put that long-term objective, you can begin to invest in equity mutual fund. If your investment is short-term, you can still take advantage of money market interest rates or money market mutual fund. The idea is that when you expect yields to go up, you try to maintain a short duration and take advantage of yields when yields get higher. So in trying to hedge against inflation, what I advocate is try to diversify in terms of currency, have some mutual funds in dollar mutual funds, and also have some equity mutual funds if you're able to take 2 or 3 year horizon. And if your horizon is just about 5 years, also take some fixed income mutual fund. But it's very possible for you to hedge against inflation rates in this current climate that we are in.
All right. Data from the Security and Exchange Commission revealed that, on average, the 118 listed funds as of 31st of March 2021 dipped by about 1.91%. Having recorded a similar decline in the month of February, what would you say contributed to that?
So, good question. So, one is the rising yield environment. When we saw low yield environment last year, we saw a lot of investors move their preference from money market mutual funds to fixed income mutual fund. Now that yields are rising, we are seeing investors take their funds from mutual funds and investing directly in T-bills. 1 year treasury bill is currently at 10%, although the 90-day treasury bill is at 2%, 180 days at 3%. We are seeing direct investment in some of these instruments. Also, we saw some institutional funds as well invest in mutual fund last year. So for some of them, they're investing directly. Last year, for a lot of the banks, they were giving rates as low as 1% and sub 1%. Since the beginning of this year, we've seen a repricing for a lot of the banks. A lot of them are giving higher rates. So we are seeing funds leave from the mutual funds and into direct fixed deposit investments and some direct Eurobond investments at the moment. So we are seeing direct investments. And last year, for instance, yields were low. What we've seen as well is that some people are taking funds and also doing some real estate investments. Some people took advantage of low yield environment to develop their properties in real estate. So I just seen one asset reallocation, and that's what's causing the dip in mutual funds at the moment.
All right, thank you very much for educating us on that, Bolaho. We do appreciate your time and enjoy the rest of the holiday.
Thank you, and enjoy your holiday as well.